So, can we expect an out-licensing deal on this, and how big is this going to be for Glenmark? If you could give us some numbers in terms of potential sales.
So we've got positive data, phase 3 data on GSP 301. I mean, this is a big event for the company because this is our first branded product, to clear phase 3, and we are hoping to launch this product, file it in FY18 and launch it in FY19. So I think from a sales potential perspective, it's at least $100 million opportunity for us. So it's a big event for us.
Okay, and when can we hear about the out-licensing deal, Glenn?
So we are, in all likelihood, we will be commercializing this product on our own or with a partner. We are still debating the best way to get to market. So over the next year, we will have further information on our commercial strategy.
So you did say that there is a $100 million opportunity that you're seeing with this deal, right?
Well, clearly sales potential is about $100 million for this particular product.
Okay. And what would that translate to in terms of your own revenue growth that you're expecting to see over the next, say, 1 year or so?
So we will file this product in FY18 in the US, and we will start commercializing in FY19. Okay. And post-commercialization, right, you can expect $100 million of peak sales, right, coming through on this product.
Okay, so
but the key takeaway is this is only the first product, and we have a host of other branded products.
I was going to, in fact, ask you about that. What would the pipeline look like in terms of filing over the next 1 year or so?
We have close to 3 or 4 products, branded products in development, and every year from here on, hopefully, we should have 1 product entering phase 3 and completing phase 3. So it's a pretty exciting pipeline that we've developed internally.
Okay, but this product in particular, Glenn, FY18 you don't have any revenue potential because the next step, as you said, you'll be filing in FY18, and the revenue potential is only for FY19.
That's correct.
Okay. Well, now that we have you with us, I just wanted to ask you, Donald Trump's latest pick, Scott Gottlieb, who is a former FDA Deputy Commissioner, is going to head that drug authority, believed to be committed to lower drug prices. How should that impact you and other companies that export to the US?
Well, clearly Scott is a veteran and has been with the agency for a while and clearly understands the industry pretty well. So generic prices in the US are currently at its lowest point with the kind of competitive pressures that most companies are facing in the environment because of the channel consolidation and the price pressures. So clearly, the generic side of things is extremely competitive from a US perspective. So I think the main focus would be on the branded side and not the generic side.
So earlier you had indicated to us when we spoke last that the US based business pricing pressure could be about 8 to 10%. Do you think it could get worse in the quarters to come?
Well, I think the reality is clearly north of 10%. If you look at Q4 and the pricing pressure in Q4 is north of 10%. So there is a significant amount of pricing pressure that companies are witnessing on the generic business.
Okay. Glenn, we have also seen a spate of US FDA Form 483s, warning letters. From industry point of view, what's your stand on that? I mean, what's your view on that?
Well, I think that's part of the regular business. I think most companies, India is such a large supplier of medicines to the US now. And, the agency will continue auditing Indian facilities and, you will continue to see 483s and warning letters as we go forward.
Okay. Just one final question then. You said that the pricing pressure could be northwards of 10% Q4 onwards. What would this do to your margins? Because you had indicated a margin, performance in the range of about 22 to 23 odd %. Could that be under threat as well?
Well, I think the margin expansion is all coming out of new products, and clearly right now we have Zetia, which is being sold right now in the U.S. market. So this quarter and a part of next quarter should also look very exciting on account of Zetia and the kind of cash flows and revenues that we're getting out of the product. But I think longer term, margins will be under pressure unless you keep getting new product approvals and you're able to expand margins by way of new products.
All right, Glenn. Thanks a lot.